Of LTL, my old stomping grounds, where mid-quarter numbers were announced. FreightWaves finance writer Todd Maiden joins us now.
Todd, thank you for coming on the show this morning. Let's talk a little bit about some of these LTL numbers popping up and really what we're seeing just overall in the sector.
Yeah, thanks for having me. So, intra-quarter updates were favorable again through April and May. Revenue per day increased. High 20% range at Old Dominion and mid 20% range at ArcBest. So that unseasonal strength that we saw in the first quarter really continued through the end of last year, has rolled right through April and May. You know, there's some caveats to that, but overall, I would say the numbers are pretty strong.
Yeah. Was there anything that particularly stood out to you, Todd?
Yeah, I mean, I think kind of anybody knocking on the space or the bears, so to speak, would point to the moderation in the year-over-year tonnage metrics. So, tonnage was up in the low single to mid-single digit range compared to 10 to 12% growth in the first quarter. But then, the bulls would probably point to the fact that yields have continued to surge in the period. So revenue per hundredweight's up 20% so far, more than 20% from some carriers so far in the quarter. And then, fuel has a big piece of that. Fuel for Old Dominion, I think, was about half of that gain. But, even backing out, fuel prices, which you mentioned in the opener, is up 70% year over year, 20% on average higher from Q1 to Q2. Even backing that out, it still looks like the space is going to get those 10% core contractual rate increases that they've got in the last couple of quarters, again in the second quarter.
Hey, Todd, I just had one question on that, on the revenue per hundredweight. You said it was 20% up. Is that quarter to quarter up 20%?
No, that's year over year.
Year over year.
That's a year over
okay.
year.
Gotcha.
Yeah.
Okay. Yeah, that makes a bit of a difference.
Yeah, absolutely. And Todd, sticking with Old Dominion for a little bit, they've just seen quarter after quarter after quarter of stellar performance, it seems like. Specifically talking about when they're released quarterly numbers, their operating ratio has continued to just improve and improve. Do you see that continuing to be a trend through the mid and end of 2022 as well?
In the near term, yes. At some point, and the Target again lowered their expectations this morning. Lowered their margin forecast. Sales are going to be fine, but even after 2 weeks ago when they came out and they said we're going to take a margin hit because of too much inventory, it looks like it's going to be even worse now. So that overhang is going to have to be worked off. So at some point, even though LTLs have more of an industrial bent as far as the type of freight that they haul versus retail, at some point that's gonna weigh on results. It's gonna weigh on top line some. I think the yields will continue to be there, but in the near term, to your point. Old Dominion, so their revenue per shipment over the last 15 years has grown at a compounded annual growth rate of 5.1% compared to cost per shipment at 3.5%. So there's a 160 basis point spread. To your point, that's what has improved margins, has driven that OR from that 90% range in the mid 2000s to what could very likely be the first carrier to break 70% in this quarter. So everything's lining up for that to happen. It gets a little bit tougher in the back half. Tonnage comps, yield comps, everything gets a little bit tougher. We don't know what costs are going to look like. At some point, fuel comes off. As those prices moderate, gross yields will moderate. So there are a lot of variables in play, but the fact that they're sitting at a sub 70 OR would be quite the accomplishment.
Yeah, that would be amazing.
Yeah, absolutely.
I come from roadway where 96 was awesome.
Yeah.
Well, that's still out there.
I know it.
Todd, before we let you go today, obviously you mentioned ArcBest and Old Dominion. We're going to be watching them for stellar performance. Are there any companies, any carriers that you're going to be watching throughout the Q2 reporting earnings season or just through the rest of Q2 to really kind of make improvements? Or maybe they're a little, like there's some carriers that are sitting on the edge of being good versus not being good?
As far as making improvements, I think you look at Saia. They have a huge growth initiative. They've really had a big growth initiative in place since 2017 with their expansion in the Northeast. But they're continuing to backfill parts of their network, parts of their map. So, and they have a big yield initiative in place, and they're rationalizing costs, using tech automation throughout their facilities. So that'll be an interesting story to watch. That's one that could perform OR wise, could see continual improvement in results throughout the cycle. And then Yellow, we haven't had their intra-quarter update yet, but we should get that either tonight or tomorrow night. And they're doing a whole network restructuring, which we've covered a ton. But it'll be interesting to see what happens with their numbers. I expect tonnage will be off pretty heavily, but they're doing a freight swap. They're really more interested in getting the right freight in their lanes and driving yields higher. So those are kind of the two that I think will be interesting over the, one, Yellow's intra-quarter update, and two, Saia's second quarter report.
Excellent stuff. Yeah, so they're going to work through some little intentional embargoes there and try and move some freight around in freight classes. Always difficult in this type of environment when you start getting dumped on out of the truckload environment. Thank you so much, Todd. We're going to bring on Mary O'Connell now to get her take on this, right?
Yeah, continue that conversation about the LTL space. Mary, thank you for joining us today on the show. Let's talk a little bit about your perspective on things going on right now.
Hi guys, thanks for having me. It's not really a secret to anyone that's been doing LTL for a while. Capacity over the last few years has gotten much tighter, to say the least. You're seeing more LTL carriers not necessarily picking up their shipments on time, if at all. That's kind of been the norm, where you really only start getting escalating your problem if it's been 2-3 days and then your shipment hasn't gotten picked up. So it's the entire network just across the board for all the carriers has seen a huge surge in demand, especially over the last 2 or 3 years in particular. So it's no secret that as a result, everyone's been coming out with stellar earnings reports. It's honestly going to be shocking to see, we didn't have a year-over-year doubling of margin or revenue. You're going to be pretty shocked to find someone that hasn't succeeded and outperformed their goals.
Yeah, it's a difficult market though when you start talking about those type of things. I mean, when we heard from Todd on the their earnings from two really well-run companies actually, right? And they do a tremendous job in their pricing departments and understand. And they've been working at it for years, right? They understand those dynamics of when truckload comes down, shipments start to get smaller, but it starts bleeding into LTL, which was already tight on capacity because of the demand, right? And then you start getting these market volume, these spot market volume contracts that are really designed to fill air and pay fuel, but can just devastate your revenue per hundredweight and your earnings. Can you talk about that management style there and what's needed really to navigate that?
So Todd had mentioned Old Dominion and ArcBest. Those are two very well-known LTL carriers. They're historically known on the pricing side for not necessarily being your cheapest option, but more or less your freight will get there in one piece when it's supposed to. Those are the ones that you historically don't have the highest complaints on. It's a good day to be those sales reps. And then some of your other carriers so Old Dominion and ArcBest have already kind of realized the freight that they want to haul. They've already picked their ideal freight. They're going out there, they're looking for it, and they're not wasting a bunch of time picking up undesirable freight for their network. That being said, that undesirable freight still has to be moved. So that's kind of fallen to some of the other carriers that might be better specialized in that. So I think Saia and other carriers, they're kind of finishing the process of going through and figuring out the freight that they want to haul and their ideal freight in certain markets. Whereas I know you guys had touched on it with Todd. Yellow is currently in the process of doing that. So I think the reason that ArcBest and Old Dominion that we've seen have been so successful consistently and have been such high performers is because they started the trend of finding the freight that was the most desirable for them, and everyone else kind of caught on. Because run an LTL RFP in the last 2-3 years, you're going to have a lot less returns on you're going to have a lot less pricing come in because it might not be the most desirable freight. I can't tell you how many times I heard, it's not the freight that we want to haul. And you're like, I know, but someone has to haul it. Like, I can't go back to my customer saying, sorry, we can't find an LTL carrier to haul your freight.
True, but it's going to cost you or it's not, right? And that's kind of the dynamic that they're working on, right? It'll cost you an arm and a leg, and they'll haul it because it's not the right freight mix. It doesn't work for their revenue, because really what they're looking for is revenue per trailer. They care less about weight as long as it's legal. It's revenue per trailer is what they're trying to do. Cube utilization, revenue per trailer, and they use that pricing as an embargo. But then you have those others that are just looking for volume, so they'll throw down, and they may haul it for $2 a hundredweight, or Old Dominion will charge you 50, right? It's your choice.
Exactly. It's all about that perfect mix. And if you have that real nice stackable, like shrink wrap pallet freight, you will have no problems. But if you have like long, awkward, not really easily fittable on a pallet, or maybe it takes up 2 pallet spaces, it's not really shrink wrappable, it's just weird, bulky freight, you're probably going to get charged arm and a leg, and you might get, a couple carriers that'll do it. You're going to get a lot of regional carriers involved. But for the national carriers, they are more focused on maxing out that cubic density, to the point where we've even seen a rise in a cubic density charge, which is a charge that certain carriers are implementing when your freight is not dense enough and it takes up too much space and not weight, or too much weight and not space. There are pretty much, unless you have like the perfect spot, you will probably end up getting a charge for taking up too much space on the trailer or not enough space on the trailer.
Yeah, I was a W&I inspector for many, well, I mean, you're always a W&I inspector at Roadway Express. So for 12 years I was one. So yeah, I'm familiar with articles of extreme configuration and cubic density. Absolutely.
Mary, before we let you go, I want to ask you the same question I asked Todd. Are there any companies in the LTL space that you're going to be looking at sitting on the edge of performing well versus not performing well? And what are those companies, if you can put a name to them?
I mean, we'll always see ArcBest and Old Dominion performing well. I mean, they've got it down to a science. ArcBest was one of the first people to come out with dynamic pricing, which is something that has ended up serving their business very, very well. And dynamic pricing is just pricing that fluctuates based off their network, their demand, where they need it. So of course it's cheaper on lanes that they need freight, and it's more expensive on areas that they don't need freight. It just changes automatically. It's pretty game changing. And we're starting to see some other carriers implement that as well. I think anyone that's kind of been paying attention to the LTL space, I hate to say it, but Yellow, they're going to, I'm waiting to see what they do. I know they just had a Moody's rating change. So I think it's just a matter of seeing if they can continue to perform, and they can continue, if this restructuring actually will help them move freight through their network, or if it will just be more from Yellow.
Yeah, maybe they'll just get another $700 million loan. Who knows?
We'll talk about that if it does.
That's always an option.
Thanks for joining us this morning. We'll catch up with you again more in our second hour to talk about RFPs and what's going on in that space. Right now, we're going to head over to the wall. We've got our first carrier update of the morning with Tony Mulvey and Donnie Gilbert.